Good morning, everybody. This is Billy Trout with the Tennessee Department of Revenue's Taxpayer Services Division. On behalf of our Commissioner David Geragano and our staff in Taxpayer Services and our Audit Division, we'd like to welcome you to today's presentation on the Revenue Retail Accountability Program. Very interesting program that we have here. Joining us today is our main presenter for the information on your slides, Katie Julian, in our taxpayer education section. And our technical expert is Mr. John Bryant from our audit division, who works very, very closely with the RAP program, is integrally involved with it. So he'll be offering his insight as well. We have our Assistant Director, Dan Vinson, available in our chat, and we appreciate his participation as well. So with that, we'll go ahead and turn this over to Katie for some intro things. And if you need anything else, at the end, we're going to open up chat, right, Katie?
That's right. Yes, sir. Thank
Thank you,
you.
everybody.
Good morning, everyone. Thanks for joining us. Thanks for joining us today, or if you're watching this recording later. Glad to have you. We are, as Billy mentioned, going to be discussing the Retail Accountability Program, and very excited to have John Bryant. He is the guru on this subject within the Department of Revenue. So excited to have his input here, and he's been very helpful in putting the presentation together. So thanks to him. As Billy mentioned, we are going to open up the chat when we're done with the slides. So if you've got any questions, hold them till it's about halfway through. We'll open up the chat, and your chat messages will come directly to this panel. So we will have a recording of this presentation posted in our webinar video library either later today or tomorrow. There is also a PDF that goes along with these slides. You cannot click on the hyperlinks that you see on your screen right now, but in the PDF you will be able to click on these hyperlinks, and I believe Dan put it in the chat. If you're just now joining us, maybe if one of y'all could go ahead and
We
make it
just
fresh.
posted the
Good.
link,
Okay.
Katie, just a second
Perfect.
ago.
So you can follow along with that to click on the hyperlinks. All that being said, we'll go ahead and get started then. So this is our webinar about the Retail Accountability Program. The purpose of the Retail Accountability Program, which we are going to refer to as RAP, is to ensure that sales tax collected from consumers is submitted to the state of Tennessee. Simple as that. You can find information about it in the TIN code annotated 67-6-410. We're going to be talking about the history of RAP, why we do RAP, where did it come from, the specific role of wholesalers, the role of retailers, and then we're going to share some resources throughout with you as well. And then second half of today, we're going to be answering your questions. We do have an informational web page dedicated to RAP. If you've got the PDF open here, you can click on it, click on this hyperlink. It'll take you right over to there. A lot of the information we're going over today you can find in that section. We'll also be taking a couple field trips throughout the presentation today to show you some specific places that we're going to be referencing. All right, so the history of RAP. In 2012, there was legislation passed that required wholesalers of beer and tobacco products to file an informational report to us, the Department of Revenue, electronically. Prior to this law, the Department of Revenue, we were expending large amounts of resources on retail businesses that specifically sold beer and tobacco, with over 50% of those audited at the time reporting less than 50% of their sales. So then in 2016, the program was expanded with legislation requiring wholesalers of food, candy, and or non-alcoholic beverages, including soft drinks, to file those informational reports electronically as well. So now our tax system automatically analyzes over 23,000 leads each quarter within just minutes. So resources way down there. It's resulted in significant increase in compliance and a substantial decrease in fraud. So how does it all work? These reports that the wholesalers are required to send us. So the reports come directly to the Department of Revenue from wholesalers, not just in Tennessee, but all around the country if they meet certain criteria, which we'll get into that here in a minute. So the wholesalers report these sales made to retailers. The retailers just file their returns, and then the system automatically compiles purchases by retailers plus a minimal markup and compares that with the data that those wholesalers sent to us. Simple as this: in cases where there's a discrepancy, an inquiry letter is sent to retailers, and then if the situation's not remedied, it can be followed by assessments and other stuff. So we'll go into all that as we proceed today. So sales tax has existed in Tennessee for a long time, but since 1947. Excuse me, 47. Since that time, wholesalers have been required to keep records of their sales to retailers and have those records available for us to review in order to aid in the proper administration and collection of law, right? Okay, so then this law came along that required wholesalers to actually report that information to us, not just keep it available, but to report it to the Department of Revenue. What must be reported? So all wholesale beer and tobacco sales, all sales. um, we were just talking about in the few minutes before this started when we were talking, John let us know that a lot of the breweries out there that do sell beer wholesale are supposed to be also reporting their sales. So all wholesale and tobacco, wholesale beer and tobacco. Again, in 2017, WRAP 2 is what we call it, candy, food, non-perishable food, that is, and non-alcoholic beverages are required if annual wholesale sales are over 500,000. You see there's a couple of asterisks there. Wholesale sales, as reported on the sales and use tax return Schedule A, line B, and candy, food, and non-alcoholic beverages, I will say, that are made to an affiliate do not need to be reported. So affiliate is defined as the wholesaler owns more than 50% of the retailer or vice versa, or the wholesaler and retailer are more than 50% owned by a common parent. Ownership can be direct or indirect, so that's how they define affiliate. It's important to note that sales of perishable grocery items are exempt from the reporting requirement, such as fruits, vegetables, deli meats, cheeses, salads, other deli product, fresh, refrigerated, frozen meals, all of those are excluded. So we're just talking about non-perishable food. So again, all of this came about in about 2012, the beer and tobacco, and then a couple years later, candy, food, and non-alcoholic beverages. When and how to file. So wholesalers will upload a CSV file through the reports account in TNTAP. You see a snip here, and you can zoom in on your WebEx screen if you want just a little bit. But this is example of what it would look like. This is going to be right along on your main TNTAP homepage, where you're going to see your sales tax account, your business tax account. You're going to see a reports account. Wholesalers will have access to this report, and you can see here it will say file now when your report is needing to be filed, and that's where you'll upload the CSV file. How does the data need to be formatted? Well, there's a link here if you've got the PDF that will take you to this page. I'll actually take you there here in just a minute, but this is an example of all the information that is required for you to submit to us. You can find a lot of this information on the resale certificate that your retailer is submitting to you in order to not have to pay sales tax to you on the wholesale purchases. But and then of course the information that is also required in addition to the retailer information is going to be what the amount that you sold. So information can be reported by invoice or combined into one total amount purchased by the retailer for the month or quarter that's being reported. So with that, we're going to go on a little field trip here. I'm going to show you where to get this information. Over to our website here. All right, you should be seeing our website. I'm going to go to the tn.gov/revenue homepage here. Under tax resources, the drop down here, there's also a tile for it a little further down. I'm going to click on tax compliance information. There on the menu on the left, we're going to go down to Retail Accountability Program. This is all things WRAP right here. So how the program works, the role of retailers, role of wholesalers. Looks like I think our chat is open actually already, right? Yeah, I think it is. So that's cool. The role of wholesalers, I'm going to click here for a little bit more information about wholesalers. Going down to the bottom here, file layout, report due dates and file layout. Here's a spreadsheet. I can't click on it right now, or I could, but you wouldn't be able to see it because it takes you over to an Excel spreadsheet. But that is the spreadsheet that I was just showing you on the slide. That's how you can view details of that. Lots more information here, file layout options, lots of information for wholesalers there. Okay, back to my slide here. Okay, so we do have some forms of communication with wholesalers. One of the most important ones being a message that you're going to get, and what you're seeing here, it's teeny tiny. I'm going to read to you what it says, but then this is an email that is sent that you would be able to also access through your TinTap portal. And it's very important that we get good, accurate information on these reports. If not, if something's not lining up, you're going to get this message from us. And basically what it says is attached is a list of invalid location ID numbers that you recently uploaded in your report. So the message also says, please be aware that the location ID could have changed during the month and you are required to report the sales to the correct location ID. So you do need to have on hand the resale certificate from each retailer for all sales. And a little bit more information there, but we're going to give you a warning email basically saying, hey, we're missing something from you, or something's not looking right. So John, did you want to add something to this?
Yes, I did. For wholesalers to make sales for resale, the wholesaler must have the retailer's sales and use tax certificate of resale. The number that the wholesaler is actually looking for is the location ID number. With the resale certificate, the wholesaler cannot make sales exempt of tax, and if they do make those sales, they would need to collect the sales tax on those transactions until they receive a copy of the valid sales and use tax certificate of resale. Now, if a retailer will receive the sales and use certificate of resale, they'll get one for each business location. So each individual location will have their own certificate of resale with a location number on it. That sheet is what you need to give to the wholesalers when you want to make purchases for resale.
Absolutely. And so like I was mentioning, thank you, John, the information that's on that certificate of resale, you're going to plug that into your report, but also are required for audit purposes. I believe this is right, John, that they need to retain the copy of all resale certificates.
Yes.
Keep on hand all copies. Yes. So there is a penalty for wholesalers that's $250 per month for not filing the report or negligently or knowingly filing an inaccurate report. It can be assessed for each inaccurate report or for each month or partial month that the report is not provided past the due date, and the maximum there is $2,500 penalty. Penalty can be waived if the wholesaler can establish that there's good and reasonable cause for the action that led to the penalty. Just FYI, the definition of good and reasonable cause is defined in TIN Code Annotated 67-1-803 C and D. All right, switching over to retailers here. First and foremost, as a retailer, understanding compliance is and understanding the filing requirements is key here. It's important to ensure that you're complying by charging the correct amount of tax on the items you are selling. That means, certain food items don't have a special rate, certain candy does not. Understanding all that is going to be the key here to avoiding a RAP assessment. We are sharing with you a couple of resources here if you want to get back to some basics of sales tax and just watch that as a reminder of everything. The webinar we have on sales tax basics is great. And also we have a tobacco taxes webinar that you might find helpful. So you see here at the bottom here, it says, all tax is going to be due from the retailer on taxable transactions, regardless of whether it was collected from the customer. If you had an oops and didn't collect it from the customer and you're the retailer, you still have to pay that tax. I think there's sometimes some confusion over that. So all tax returns filed with the Department of Revenue do undergo some sort of office review or audit to ensure that correct tax has been paid. This review could be a computer math calculation, a manual examination by an auditor, or both. So the department's going to contact you if it needs additional information to complete this process, and we'll send a written notification if it makes any adjustments to a return. So an office review, including a RAP inquiry or assessment, is limited in scope and does not disqualify a taxpayer from being chosen for a field audit as well. So communication, what's going to happen if the numbers aren't lining up, basically, from what the wholesalers reported to us and what you've reported as a retailer on your sales and use tax return? If it's not adding up, you're going to get this, it's called an inquiry letter, a RAP inquiry letter. Its analysis indicates that the retailer potentially underreported sales on the sales and use tax return. If you get this letter, you're going to have 30 days to review the information that your wholesalers provided, and you can submit any documentation to confirm if your sales are correctly reported. So you want to first ensure that proper tax was reported, and then of course amend your return if needed. You can check that wholesaler information. We'll show you here on the next slide how to do that. You're going to check and double check your tobacco buy down credits, check for inventory issues. Basically, there's something off if you get this letter. There's something that was between what the wholesalers reported and what you reported. Something's not lining up, so it's time to figure out what is not lining up. And next, we're going to go over these common reasons that the assessments would be adjusted, like tobacco buy downs, wholesaler data errors, and inventory issues. So to view the wholesaler data in TINTAP, if you are a retailer of any of these items, you may already be aware of this, but you may not. What you're going to do is you're going to go into your sales and use tax account, view, and you're going to click to view returns, and then you're going to click on the date of the inquiry. So going back to the previous slide here, it's covered up here with words with this WAP inquiry letter information, but under that you would see a period listed, and then you see here, let me turn on my pointer. This, for example, is the March 31st, 2023 period is what I clicked on. And then you're going to see something that says RAP assessment data. When you click on RAP assessment data, you're going to see all those columns that the wholesaler submitted, your location ID number, your address, the amount either on the invoice or by the month that you purchased from that wholesaler. You can see all that data. You can also export it to a CSV file, but you really need to, if you get an inquiry letter from RAP, you need to review this information. Yes, John.
So as we discussed, what's the required items are beer, tobacco, cigarettes, food, candy, and non-alcoholic beverages. But that doesn't, the wholesaler is still allowed to report any and all items that are on that invoice that the retailer, when they make those purchases from the wholesaler, they get that invoice. All items can be reported if it just makes it easier on the wholesaler. So starting in 2017, all purchases reported to the department may be used in the RAP calculation and assessment. So when you're viewing your data, you may see additional items besides beer, tobacco, cigarettes, food, candy, and the non-alcoholic beverages within your RAP report. Now, one thing I do want to hit on is what if you find an issue with the wholesaler data and you need to have that data corrected? You need to reach out to your wholesaler because they're the ones that supplied the information to the department, and just notify them of the error. Then what you would request is the wholesaler amend their information report, which they can very easily. They can just go in, re-upload the corrected file. And once the wholesaler has notified you that they have uploaded that corrected file, then you need to contact the department on your letter, on your notice of assessment or your inquiry letter. There, our telephone number is there and our email address. Just reach out to us and notify us that the wholesaler has amended that report, and then we can rerun the numbers for you.
Great, that's very helpful. I was just looking, so John, the inquiry letter, is that going to give a specific auditor's name that they would reach out to, or just the RAP division in general? Or does it matter who they reach out to?
That would be the just the RAP line. Whenever they
Okay.
call in, then it will ring a auditor. So somebody will pick up when you call in. You can't actually call in after hours, and our system will automatically go to a voicemail system,
Okay.
and you can leave a voicemail. We'll contact you. It's a holiday weekend, and you have a question, you can either email us or call us, and calling us goes straight to the voicemail. Just leave us a message. We'll give you a call back, or you can email us and we'll contact you.
Great.
when we
Okay.
return back
And
to
we've got that
office.
information. We're going to share that here in a few slides for how to reach out to RAP your area. Thank you, John. Like he said here, the retailer is responsible for notifying the wholesaler. If there's a wholesaler error, don't call us first to tell us that. Reach out to your wholesaler. And like John just said, they will correct the data if needed. Everything, that hopefully would fix everything, right? All right. Tobacco buy downs. So Tennessee sales tax law allows retailers of tobacco to take a credit for tobacco buy down payments received before calculating the amount of sales tax due. So tobacco buy downs are a type of manufacturer's incentive. They're offered to retailers to reduce the price of tobacco to customers without requiring the customer to show a manufacturer's coupon. The manufacturer enters into a contract agreement with the retailer who agrees to reduce the price of tobacco sold to customers. So these tobacco manufacturers report tobacco buy downs to the Department of Revenue, to us. And in order to confirm an adjustment to a RAP assessment, the retailer is going to need to contact us, the RAP unit, with their tobacco manufacturer's account number or mail the tobacco buy down information to the RAP unit. John, you got something to add on this tobacco buy downs topic?
Yeah, buy downs are I mean, they will reduce your RAP assessment. So you definitely want to make sure that we have the correct information. We should have received all that information from the cigarette manufacturers, but there are occasions where one or two may be left out. If you want that information, we can provide you the information of what was submitted to us. But on your notice of proposed assessment, it will just show a total buy down amount. One thing to remember is there's other payments that may be issued with that buy down that you received from the manufacturer. Though some of these payments are not considered buy downs. These would be like merchandising payments, data incentive payments, and there's a multitude of other ones that are not directly linked to a certain brand of cigarette. So that is not considered a buy down. That's actually just a payment to the retailer that's not passed on to the customer. So we cannot take those into account as a buy down.
So it sounds like good record keeping here is going to be important, right, John? If you've got
Yes,
tobacco buy
yes.
downs, because if
You will receive this buy down information. The major manufacturers have websites that you should have a login. You can log right in, pull the information down, verify it, and it will send us that information. Now, we cannot accept spreadsheets, Word documents, anything that can be edited. We will not be able to accept those items, but you can take screenshots of it as long as it has the items in it that we need, and that's the name of the cigarette manufacturer providing the buy down, the name of the business receiving the buy down. We need the buy down period that's the cigarettes were purchased, and then the amount of the buy down credit. And all the major manufacturers' websites has all that information right there for you. If you're not for sure how to access that, you should have a cigarette or tobacco manufacturer rep that comes through, and you may want to check with them, and they will get you access to that website. But yeah, that is information that you should be keeping for 3 years at least within your files.
Great, good to know. Thank you. All right, another thing to check on if you get this inquiry letter is inventory issues. These can range from new business building inventory to an existing business losing inventory due to circumstances such as theft or disaster. So for retailers that are building up inventory, you'll need to submit detailed inventory records from the beginning of the assessment period and the end of the assessment period. And that's something that you will correspond with our RAP department about. For retailers with loss in inventory due to theft or disaster, what's going to be required there is to submit police reports and or insurance documentation proving the loss. We understand these things can happen, and that could very well be the reason for that discrepancy in the wholesalers' reports and what you report. So we can work with these pieces of documentation to have things line up correctly at that point. All right, so you receive that inquiry letter 30 days later. If nothing has happened, you haven't fixed anything, the analysis and calculation is updated, and a notice of proposed assessment or NOPA letter is going to be mailed if we show that additional sales tax is still due. So penalty and interest will be applied to the unpaid tax assessed, and the retailer will have an additional 30 days to review the purchases reported by wholesalers before this assessment becomes final. Once it becomes final, then it will move into our collections division, and you'll get a call from them. You don't want it to come to that. So the department calculates a RAP assessment by marking up the retailer's purchase price of beer, cigarettes, other tobacco products as reported to the department by the wholesalers, and comparing those marked up prices to the sales reported on your return, right? So beer purchases are marked up 15%, tobacco purchases are marked up 11% for the period, actually that's for the period July 1, 2015 through June 30, 2016. Since then, it's 15%. Sorry, so tobacco 15% markup. We do have some examples of how the tax is computed. You can click on the link there if you've got the PDF open, but I'll go ahead and take another quick little detour here and show you where you can find that on our website. Back over to the Retail Accountability Program information. Here we're going to click on the information that says click here for more information about the role of retailers. And within this, the second paragraph here, click here to see how the data is used to compute the minimum amount of tax due. We won't go into all of this right now, but just for your information, if you want to check this out, a good resource here to see how we come up with the calculation for RAP. All right. So another thing to discuss here is it can be pretty confusing when there's a change of ownership of a business. There's risk of the previous business receiving a RAP assessment because its wholesalers continue to report under its sales tax account. A couple things to prevent this situation. When closing a business, you need to return the resale and registration certificates to the Tennessee Department of Revenue, close all of your accounts, and notify no later than the last day of business all wholesalers that your account is closed and should no longer be used. Very, very important there. Of course, filing a final return is part of closing your accounts. The new business, for the new business owner, you need to provide your resale certificate. You'll get registered for all of your tax accounts under you. So the old business owner has closed all the tax accounts under their entity, and now new business owner, open up tax accounts. When you open up your sales tax account, you get a resale certificate. You will need to provide that to every wholesaler that you make purchases from at the initial purchase. Yes, Billy.
Yeah, Katie, I just wanted to point out too, all of what you said is correct, but the
Good.
one thing that we also want to point out is when you do close your business, any unfiled or unpaid taxes have to be remitted. So in other words, you can close your accounts on TNTAP, that's fine, but there's final returns needed, okay, for like business tax, your sales tax, and your franchise and excise tax. Okay, so even if you close today, as we record this at the end of August, and your returns are not due maybe until the end of December or the first of next year, you can close your account and you can file your final returns now. Just contact us, let us know that we'll make the system work for you so you can go ahead and clean that up. Okay. So just want to point that out, that there's that final act of filing and paying as well.
For sure. Yeah, I like the way you put that, cleaning it up. If you're in business, it's not fun to think about closing your business, but it happens. You're selling the business, and doing it in the right way is very, very important. And again, if you're a new business owner and you've purchased a business from someone else, very important questions to ask here of the business that you're buying from. Did you close everything out? Important stuff there. All right, so with that, we are going to go ahead and move into some questions here from you guys. I believe I've seen some questions come through here while I was yapping.
Yeah, I saw one from Dawn earlier. Let's go ahead and knock that one out there, John. I don't know if you saw that come up or not. She said, when we finally receive an exempt form and request a refund from the state, what type of information is preferred by the state for a return of sales tax? Do you have a comment on that, John? Because if you don't, I do.
I no, I don't mess with much of the refunds part of it.
Okay. Well, I can tell you that in Dawn, and if I'm not hitting this right, you feel free to let us know. But if you are trying to get a refund on the sales tax issue, you can complete a claim for refund on TNTAP and submit your information in that particular way. Now, normally we don't need a lot of uploaded files or any sort of thing like that. We just need an explanation about what happened. You can amend your return on TNTAP, and just to create that credit, you can go back and amend a previously filed return for that period where there was that discrepancy, or you can claim credit for it on a current return on sales tax, where that is allowed either way. Okay. But what you want to do is you just want to document, because in our audit process, if you're ever questioned about why you amended a return, then you'll just need to prove what you're doing. Okay. And you can do that. I mean, clearly, you've got a copy of a resale certificate, or you've got some other sort of exemption or whatever, for whatever reason, just document it. And I think that's really the answer to the question. And another question, John says, does the WRAP program require reports on beer and non-alcoholic beverages, but exclude reporting on wine?
Yes, it does exclude wine. It is beer as defined within the statute, which is right at the high gravity beer, which I think is 8% or lower, would be reported for the beer.
Okay. Okay. So, John, I know also in taxpayer services, a lot of times we'll get questions about the program that are very generic. And one of them is, why do I get these assessments? What's the whole reason for this whole deal? What's going on? Can you break that down into like a really easy definition about why the WRAP program exists and what it's all about?
Yeah, you're receiving this letter because your purchases reported to us by the wholesalers was higher than your taxable sales that you reported on your sales tax return. We give a 15% markup on beer, cigarettes, and tobacco products, but there's no markup on food, candy, or non-alcoholic beverages in our calculation. We credit any tobacco buy downs reported to us by the tobacco manufacturer, and then we subtract your reported purchase taxable amount from your monthly sales tax return. So the reason you're receiving this letter is because there appears to be an underreporting of the tax amount. At this point, if you receive the letter, you want to review your wholesaler data, you want to review your buy down information, and you also want to review your monthly sales and use tax returns and make sure they're reported correctly. We're all human. We could transpose numbers in there. So just double check all your information. And then if you still have questions, give us a call, email us, and we'll assist you.
Sounds good. Sounds good. So, turns out that businesses have theft and shrinkage and that. As far as that goes, how do we approach that from what we require, John?
Yeah, well, we use a low markup percentages to account for any kind of damaged products, normal instances of shoplifting. But if you do have a break-in and you've submitted a police report and you've listed the stolen items and their cost, you can send that to us and we'll give you credit for that. Also, if you had property damage, we're in Tennessee, we're prone to flooding, tornadoes, but if you had any kind of damage to your building and you filed an insurance claim on that damage for that product, you can submit that information to us and we'll give you a credit on that too.
Okay, sounds good too. So let's look at this. Another thing we were thinking about earlier, maybe talking about, is for wholesalers that are having trouble getting their retailers to give them the account numbers and the information that they need in order to complete their wholesale reports. Or maybe what's some of the hints that you could offer on that?
Yeah, well, first of all, retailers are required to have a copy of their certificate of resale on the premises so that they can provide copies of that to the wholesalers or the distributors or their reps whenever they come in. They may come in asking for that information because the wholesaler has gotten our kickback kickback email that says this number is no longer valid. You may have sold your business, but forgot to update the wholesaler of the new account number. Now, if you're a wholesaler out there and the retailer really is hesitant to provide that number, have the retailer reach out to us. They can give us a call, email us. But remember, until you have that copy of the certificate of resale, you cannot, the wholesaler cannot make the sales exempt of tax until they have that certificate in hand.
And the information that's on that certificate of resale is the information that the report is asking for. So it's all going to be right
Correct.
there in front of them. The address, the location,
Yes.
the location ID
Name,
number, everything's on that
everything
resale.
is on that resale certificate that they
Right.
need to enter into their CSV file
Right.
when
Okay.
they upload.
I see a question here to us from Hannah about I don't see a wrap account on TinTap. How do I get one? And I'm not sure. So I'm assuming maybe they're talking about that wholesale reports account. So John, if somebody if a wholesaler does qualify for the sales tobacco or beer, is that something that they get automatically set up with when they register with us that they are a wholesaler of beer and tobacco? And what
Yes.
about the other items?
On TinTap, it is actually a INF account. So it's
Okay.
a informational report account that is set up on your account. Now, if you are a CPA or you're doing someone's books, you may need to make sure that your master account has given you permission to see that account.
Oh,
But
gotcha. Okay.
if you are working with a wholesaler distributor, that report will be under your INF account.
Okay. Right. So if Hannah, the attendee who asked this question, thinks she should be seeing this report account, the INF report account, and is not seeing it, reach out to. Well, I'm wondering if it's best to reach out to your area or here to Taxpayer Services Registration to get set up. Does it matter? Do y'all fix that in the wrap unit
Yes,
area?
we
Okay.
can fix that. We just need to verify that they actually had proper permission
Right. Right.
to access that account. But
Now,
either taxpayer services or the wrap unit
okay.
can work to ensure that they have access to that.
Now, what she may be referring to is that wholesale wrap data information. And so I'm not sure from her question. And if that's the case, you would need to click on, I'm going to go back a few slides here to this may be what she's referring to, not being able to see this. It's not going to be available for every period. It's only going to be available for certain periods, right, John?
Yes, it's only available on the periods that you receive an inquiry letter on. So it's only the
Oh.
periods that are in question.
Great. Okay. So that information that you see on the inquiry letter will say we're talking about specifically, or in this case, it was the March 2023 period. So clicking on that, I'm seeing this. But if I were to click on another period within this sales tax account, wouldn't necessarily see the wrap assessment data.
Right. If you clicked on January, you will not see it. You have to
Right.
look at the last period that is in question. That's
Okay.
where the data is. But then, let's say for Q2, you do not receive an inquiry letter. So if you clicked on June, there will be no wholesaler data out
Right.
there.
Okay.
It's only populated if there is question, if we've raised a question and a inquiry letter has been produced.
Great. Thank you.
John, I noticed that Julie had an interesting question. If you are waiting on an updated resale certificate from a retailer, but you go ahead and sell them product with sales tax, in other words, you charge them sales tax because they haven't provided that, does that go on the wrap report or does it not?
It should not be included since tax has already been collected on the product.
Okay.
But it would probably be easier as a wholesaler to run that report with the items in it. Then we'll just have to, we can work through that, really.
Okay.
But you really don't need to include that information if you collected the sales tax on it. But it just depends on how your system works. If it's just easier to upload all the information at one time.
Okay.
And I would assume, John, if a wholesaler did report sales where sales tax was collected, since they didn't have the resale certificate. That would be one of those examples maybe of where if the retailer got an inquiry letter and saw that, they'd say, wait a second, hold on, I paid sales tax on that. So I would, like, would that
Yes.
be
At,
something
at
they
that
bring up?
at that point, they would need to contact us and
Okay.
provide us the receipt where they paid the sales tax on it, so that we can give them credit on their wrap inquiry.
Right.
And here's an interesting question too. What if you have a company that's a tobacco or tobacco supplies manufacturer, and the rep is going to purchase obviously from a wholesaler and pay taxes and will make the sale to the retailer. So wouldn't that kind of not be on the manufacturer? So we're not really talking about manufacturers here. Am I tracking that right?
Let's see here.
It's from
Yeah,
Shell.
I'm not sure if they're talking about, are they talking about tobacco tax? Or are they talking about the sales tax?
Okay, maybe that's an important thing to know, as
Yeah.
far as that goes. But for RAP assessments, we're not really
Yeah,
looking so
she
much at
she did
manufacturers, right?
that would be tobacco tax.
Yes, okay, yeah, and then that's a whole different subject. For a
Right.
different day, turns out.
But
Yeah.
important to note here that with RAP, we're just talking about sales tax
We're talking about sales tax, yes.
only. Yeah.
Yeah,
Okay.
yeah, maybe that's an important point to clarify there.
Yeah,
These are
if you
great
have a
questions.
question dealing with the tobacco tax, just please contact Taxpayer Services, or you can contact RAP and we will assist you with the tobacco tax question.
Okay, so Don had another question that came up. Does e-commerce sales apply to out-of-state individuals? As far as RAP goes, they sell coffee as a wholesaler through a website to people that are out of state as well. So how would that play into it, John?
Well, coffee is considered a perishable item, so the coffee's not even required to be reported to.
Okay, so it's just it's a non-issue then.
It's a non-issue.
Okay, perfect. What's the penalty for non-issued products, John? It's a joke.
Well,
It wouldn't be a penalty if there's no.
wouldn't be one.
It'd be zero, right? Okay. All right. Well, I don't know. Any other questions? We'll ask maybe one more time to splash through the chat to see if anybody else has got anything we want to touch on.
Or John, if
Before we
there's
wrap up
anything else you
today.
can think of, frequently asked
Yeah,
questions that you deal with.
I do have a couple that kind of get raised every once in a while, and that's discussion on penalties on our RAP assessments. When we produce a RAP assessment, if this was your first one, there's a 10% negligence penalty added to the RAP assessment. Now, after if you have received 3 RAP assessments, so we issue RAP assessments either quarterly or half-month period or 6-month periods. If you have received multiple RAP assessments, let's say you received 3, each one of them would be 10% penalty each. Now, when you receive that 4th, we deem that as fraud. The fraud penalty then increases to 100% of the tax owed. So our best idea is you don't receive any RAP assessments or RAP inquiries. You're properly reporting. But we do have instances where a location has received multiple RAP assessments. Once you receive that 4th one and on, we deem that as fraud, so you would receive the 100% penalty on those assessments.
So if someone, John, like in the case of theft or one of those, a natural disaster or something where the retailer's obviously not at fault at all, would it be a good idea to be proactive and reach out to us if that happened? Or I believe actually, isn't there Is there a line on the sales tax return to report that? I'm not recalling.
Yeah, uh, I'm not absolutely for sure on that.
I'm
But
just
definitely,
wondering, yeah.
it would be good, it would be proactive, especially if you receive that inquiry letter to notify us. Now, if it was a large amount that was stolen, yes, it would probably be good to go ahead and notify us of that. So our system, our wrap audits are all automated. So it may still get issued, but if you would want to notify us of that, because I'm sure if it's a large amount that has been stolen, you're going to file a police report.
Mm-hmm.
You're going to list the items that were stolen. Then you want to submit that police report information to us so that we can then review it and, you know, make the adjustments on your inquiry to your wholesale report to say, you know,
Right.
$50,000 was stolen from me. Here's the police report with all the items. I mean, we've even had people send in videos of the theft, showing us how they stole
Okay.
the merchandise. And yeah, we will give you credit on your RAP assessment. If you receive a RAP assessment during that period, during that theft, we will give you credit for it. Yes.
Yeah. So you're mentioning the RAP assessment, which is exactly here today too. The person in chat had asked about a potential refund of sales tax for the stolen merchandise itself. My view on that, and correct me if I'm wrong, but I think if you didn't sell it, then you didn't pay sales tax on it. So there's
That's
nothing
right.
to refund, I don't think, if I'm tracking that right.
Right. Well, our system, our rapid set systems, for example, I think they come in on like it was $100,000 worth of merchandise stolen. So if that $100,000 merchandise was reported to us, we're going to add the minimum markup. We're going to consider it as being, we think you should have sold it, but it was stolen. So you filed a police report. You would send us that police report with the items reported. We would then take those off and see, if it's $100,000, it should reduce your assessment down to, it should make it go away with that amount stolen.
Okay,
But
that makes
but there
sense.
wouldn't be any credit or refund of the sales tax because you haven't sold that product and reported it's being sold.
Well, I believe we're about out of time, y'all. John, thank you so much for joining us and answering all these questions. I've certainly learned a lot about RAP now. Hope you all have too. Thanks, Billy and Dan. We have got some information here on how to follow us or contact us. Want to call your attention specifically here. This is the RAP help information. There's a toll-free number as well. And then, of course, the email resale.data@tn.gov. Our general tax call center here. Any questions that you have specifically about RAP, the best resource for you there is to email the RAP group there if it's specifically about RAP. If it's just general tax questions, you can email us at revenue.support@tn.gov. A couple more things to touch on. Our upcoming webinars next month, we're going to be going over alcohol taxes. And then gosh, I can't believe it's already almost October. In October, we'll be doing F&E basics. These are always on the last Tuesday of the month. We also have a new business workshop coming up in October on October 2nd. Join us for that. You can register for these by going to tn.gov/revenue and clicking on taxpayer education. And then for the webinars, click on tax webinars. And for the new business workshop, you click there. This is actually a hyperlink right here if you're in the PDF that will take you over there. And on your way out today, if you wouldn't mind just taking a brief moment and completing our survey, let us know what you think. If you've got any ideas for future webinars, we'd love to hear that. If you need CPE credit, if you could just check yes that you would like professional education credit there. And then don't forget to the final question, if you do want CPE credit, we need you to, we now are asking you to put, answer that question with how you want your name on your CPE certificate. So again, thanks for joining us. John, Billy, thanks again. We'll see you all next month.
Thanks, everyone.
Thank you.
Bye.
Bye.